Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian FinTech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's FinTech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of FinTech in India. Welcome to India FinTech Diaries, the show for all things Indian FinTech. I'm your host, Elroy. As you know, we specialize in bringing you in-depth explorations of the hottest topics in Indian FinTech, but today we're shaking things up with something a little different. For the first time on the show, we're stepping beyond Indian shores and crossing the globe to Latin America. And to help us take a fresh look at Indian FinTech, we are thrilled to welcome Julio Vasconcellos and Ana Martins from Atlantico. Julio and Ana, thank you for joining us in India FinTech Diaries. We're excited to have you.
Thank you, Elroy. It's a great pleasure to be on. We're big fans of the podcast.
Great to be here, Elroy.
To begin with, we'd love to hear about your backgrounds and a little bit about Atlantico. Maybe, Ana, you could begin first.
Yeah, of course. So on my end, my career has mostly been in investing, pretty much from the get-go. So I'm originally Brazilian, spent a lot of my life living abroad. So did my undergrad at Stanford, and that's how I kind of got pushed into tech. And so this was, 2018, 2019, when Latin America was just starting to show the first signs that, real money could be made here. We saw the first IPOs back in 2018. And at that time, I had started a project with a few friends to bring more technology and innovation to Brazil, had raised about $2 million for that. And Julio was actually on my board of advisors. So at that point, I had been living abroad for almost 10 years. Julio had decided to switch to the darker side of the table and become an investor full time and begin with the founding of Atlantico. So I packed my bags, moved to Brazil, joined him straight out of undergrad, and have been here for the past 4.5 years now, building the fund. But I'll let him tell you a little bit more about the fund as well.
Yeah, and thanks again, Elroy, for having us on. I think, like I mentioned, I'm a big fan. I think we've listened probably to the majority of your episodes in preparation for our trip to India earlier this year. So it's really an awesome opportunity to be here. Just to introduce myself briefly, I think like Ana, I'm originally from Brazil, and I also moved to the US to go to college. I went to undergrad at Wharton at the University of Pennsylvania, and then eventually made my way over to the West Coast, where I got my MBA at Stanford. And this is nearly 20 years ago. And I've basically spent the better part of these last 20 years working in tech, first as an operator and as a serial entrepreneur, both in Brazil and in the US. But then now, most recently, as an investor. So to give you a little bit of context, I started working as a product manager in Silicon Valley, eventually made my way over to Facebook when the company was starting to really kind of press on the gas pedal to expand internationally. So I was the first employee in Brazil. I was responsible for the growth in Brazil and Latin America. This is in end of 2009, beginning of 2010. Okay. And in 2010, I moved back to Brazil with Facebook, and then started a company down here called Peixe Urbano, which was in the daily deal space. Long story short, scaled the company to over 1,000 employees, over $100 million in gross profit, ran it for about 5 years before exiting and selling it to Baidu, which was entering Latin America at the time. I, at that point, actually moved back to the San Francisco Bay Area and went to work at Benchmark Capital, which had been our first investor in my company. And through that, I became CEO of a company Benchmark was backing in the US in San Francisco, a company called Prefer, which ultimately never got to product market fit. We never made it work, but shut it down after about 3.5 years, which is when I decided to focus on investing, something I had been doing, I've now been doing for over 10 years, and started Atlantico down here, where, just to give you a quick background, we invest only in Latin America, perhaps with a little bit more emphasis on Brazil, which is where we're based. We're focused on investing in companies post-product market fit. So it's typically Series A's that we lead down here. And we really focus on, I think, concentrating both our capital on those companies that we have the highest level of conviction on, but also our time. So kind of really delivering this boutique experience, I think, for both founders and the overall ecosystem here. And we've been here now for about 5 years. Ana's been with me since the very beginning. And the two of us are the partners leading the fund down here.
That's a very interesting background, Julio and Ana. I think a couple of months back, you visited India and I met you as well in Mumbai. And your intent then was to get a first-hand view of the Indian fintech space and some of the Indian startup ecosystem. So I'm just curious as to, now that you've had some time to reflect on your visit, what are some of the things that surprised you the most about Indian fintech?
Wow. So the trip was amazing, and we learned a ton. So maybe I'll start and maybe share two themes I think that really stuck out for me, and I'll pass it on to Ana, and maybe hopefully she can share a couple of things that stuck out for her as well. And I think it's first worthwhile mentioning that we're obviously newbies here to the Indian ecosystem. So a lot of, I think, what we learn and what we share is really kind of the fruit of the conversations we had, and by no means are we experts in this. So I think take this with a grain of salt as a view from an outsider of the Indian ecosystem. That said, we had a little over 60 meetings in India. So we got to meet with some of the top entrepreneurs and investors and regulators and all sorts of different thought leaders like yourself, and learn a lot. So it was an incredible journey there. And I think incredible hospitality also that we felt from both entrepreneurs in the tech system, but I think just everyone we met in India. And I think that the two big takeaways we had, or that I had, were, I think the first one is what I would call this radiance of the Indian spirit. And to some extent, it's this level of optimism and energy, and I think desire to kind of conquer the world that we felt from a lot of the fintech entrepreneurs that we met. And I was really kind of taken by surprise by this sort of glass half full mentality that a lot of entrepreneurs we met, of really having this view that Indian companies are best in class, and having this massive ambition to kind of go beyond the borders of India and sort of conquer the world. I think it was very inspiring for us because, doing a little bit of the comparison with Latin America, I do think that entrepreneurs in Latin America took a little bit longer to really have this global view and global ambition to expand beyond. So it was surprising to me to see just how radiant the Indian entrepreneurial spirit was. And I think that it's something also that I saw in I would call it almost a level of ownership that entrepreneurs, but really everyone we met, felt in terms of providing this India experience and almost this India brand for someone like us that were coming in from abroad. And I think this goes all the way from, I think role models like we saw with Nandan Nilekani, sort of stepping back from, this amazing life he had and kind of dedicating a lot of his life to making the country move forward and innovate, and really, I think, setting the foundation for a lot of this public digital infrastructure that powers a lot of the innovation in India. So people like him and people that, left their high-paying jobs at, McKinsey and big tech companies to go and kind of dedicate their time to, I think, making India a world-leading power in terms of innovation, especially in fintech. So I think that was really amazing. I think that the other maybe big surprise or big takeaway that I had was, what I would call the business of free. And I think that what I would categorize this as is the fact that you now have this amazing digital public infrastructure around financial services that I think the government and the RBI and I think the regulators in general have invested so heavily on. I think what it's really translated to is that, money and the movement of money is now truly fully digital, which is something that I think people have often talked about, but I think now in India, you really see this as a reality. And I think what the implication of this is, and I think few people think about it this way, but I think it's a critical framework that at least we found was useful to understand what was happening, is that now that money is truly digital, it means that the marginal cost of moving money around is pretty much zero or very close to zero. And I think that the interesting parallel is for you to look at other models where this distribution cost of zero exists. And that could be anything from software distribution or even kind of media models where, distributing content digitally means that the marginal cost of distribution is zero. And thinking about what happens when you do have this zero cost of distribution in terms of innovation goes is what we've been seeing in India. And I think that in India, the RBI mandating, for example, for UPI to be free really accelerated the fact that monetization from money movement by itself was no longer possible, right? So looking at the innovation of companies like PhonePe, for example, where they can have enormous user bases of hundreds of millions of users on their platform moving around money, but actually not being able to directly monetize the movement of money and the innovation that comes around on everything around it, right? Whether it's originating loans or insurance or selling other products, and really kind of capitalizing, I think, on the attention and on the intent of the users on the platform that come there for money movement, and monetizing in that way, I think made me think a lot of what I've seen as far as how you monetize social networks, how you monetize digital media, how you monetize software. And I thought that these very innovative business models around the business of free that we saw in India were probably one of the most enlightening learnings that we had from the whole trip. But before I keep going for too long, I'm going to pass it on to Ana. Maybe she can share a few of her learnings.
Yeah, I think these were two big surprises for me as well. I'm thinking about kind of what I could add to that. And my first one was that every single conversation we had in the first kind of 2-3 days of our trip, we spent about 2 weeks in India. Like Julio said, had about 60 meetings while we were there. But we were immediately introduced to this concept of India 1, India 2, India 3. And
Right.
we've actually taken a page out of this playbook, and we've started talking internally about the market opportunity here in Latin America as Latin America 1, 2, 3, and 4, and Brazil 1, 2, 3, and 4. And this idea that you really need to understand kind of the demographic nuance that influences which companies gain scale and how they do so was really surprising for me as an outsider. So I had kind of the big numbers, and then through the conversations I started to understand a bit more about that. And I think a great example is, the participation of women in the workforce and how much ownership they have of financial assets. So I think we had two really interesting conversations about this, one with Kunal from Cred, and the other one with Shinjini from Salt, who has dedicated her career to helping women join the financial services ecosystem, right? And they shared some really interesting data with us, which is that, less than 5% of urban women in India have independent income. I think it was about 90% of women entrepreneurs, which make up the bulk of entrepreneurs in India. They're funded by families, and the business is often in the men's name because of cultural norms. And what this means for fintech is really interesting. It means that the products are often catered to, India 1, sometimes India 2. And then it seemed from the perspective that she shared that many were catered to male customers. And I think that's quite different from what we see in Latin America, where I think the roles are a little bit less disparate. Bank account penetration in Brazil, for instance, is 95%. So by definition, it's more equally distributed. So I think this was something that really, really surprised me. And I think the second thing that I would mention is maybe something that hasn't quite played out yet. We were actually talking, Elroy, right before the podcast started about credit in India. And it's something that I'm actually quite excited about rather than something that has already happened and that I'm surprised with, which is that credit on UPI hasn't quite played out yet. I think we're seeing some really interesting innovation around there from what we heard from people in India, and even on your series, your recent series, Credit on UPI, is that you have about, 8% of the Indian population that has access to credit cards. And then you have another 300 to 400 million people that are on UPI and that are really quite underpenetrated in credit. And the interesting thing to me is that the first kind of wave of access to credit in Brazil, so we have more than 50% of the population with credit cards. The number of credit cards in Brazil actually surpasses the number of people in Brazil.
Yeah.
So people who have a credit card have more than one credit card. It happened in the 90s, right? And I think we're starting to see this like big wave of credit adoption starting now. It's hard to say kind of how fast it will go and how successful it will be, but without the constraints that you had in Brazil and in pretty much every other market, which was the constraint of a legacy system where credit card rails were built upon and the players that make up kind of this entire value chain. I think now in India, you have a really awesome opportunity to basically leapfrog credit cards. Because now you have UPI, and it's a much more cost efficient rail. It's a real time rail, better for the consumer. And so it will be really interesting to see. And I think this was a concept that stuck with me after our trip.
Just 2 weeks ago, you released your annual deep dive into Latin America and the key drivers of entrepreneurial growth in the region. One line from the report's preface really caught my attention. And the line went, greatness is forged in trying conditions, adversity breeds resilience. I'd love to unpack that with you. Could you give us an overview of how this resilience has shaped the fintech landscape in Latin America? I'd also love to double click on how regulations have shaped the fintech landscape in Latin America as well.
Perfect. Maybe what I can do is I can start talking a little bit about regulation as part of Latin
Yeah.
America fintech, because I think it's a very critical component in the same way that it is in India. And then I think Ana can kind of take it from there and I think paint the picture of how that's played out in the fintech landscape
Sure.
in general. Also, I think thanks for mentioning our report. Just if I could do a quick plug, we release it every year about digital trends in Latin America, and it's on our website Atlantico.vc, and has a lot of interesting data both about Latin America and also some comparisons with India. So I encourage anyone that wants to learn more to download that. But going into regulation, I think regulation when it comes to Latin America fintech, and I would say in particular Brazil fintech, regulation has really been a
Yeah.
tailwind. And I think that this may sound paradoxical because I think regulation is usually a deterrent to innovation. But I think both in India and Brazil, the regulator, I think, really has paved the way for a lot of innovation in fintech. And I think that in Brazil in particular, you actually have this huge kind of second mover advantage where the Brazilian regulator and I think Brazilian entrepreneurs, they've been able to learn from examples like India, like Europe that came before them, and kind of perfect, I think, a lot of the playbooks and the practices by, I think, capitalizing on what went really well in other geographies, but also correcting some of the things that didn't go well. So I think it's been interesting to see how Brazil has been able to learn from India's successes and mistakes. I'm going to talk a little bit about our version of the digital public infrastructure that the Central Bank of Brazil has rolled out. And this is comprised, I would say, of a tripod of three key elements. The first one is Pix. And Pix is Brazil's version of UPI. That's the easiest way to think about it. It's digital, free, real-time payments. The second part of this tripod is open finance, which is, again, this easy digital exchange of data that financial institutions and regulated institutions are able to do and capitalize on each other. Again, similar to many of the elements that we saw in India around sort of this data sharing infrastructure through APIs. And the third and final piece of this is something that's called Drex, which is the central bank digital currency in Brazil. So it's the digital real.
Right.
The real is the currency in Brazil. But it's also this digital public blockchain where not only the currency is going to be on, but also financial assets are going to be on, like bonds and other financial assets, but eventually even tokenize real world assets, things like real estate and cars and everything else. And I think this is extremely innovative. So when we think about these different things, I think what the central bank here has been able to do really well is not only invest and pave the way as far as actually building out some of this infrastructure and defining the rules of the game, but I think they've actually been quite clear in their communication for the roadmap going forward, what the expectations are, what players can expect. And I think that kind of transparency has brought a lot of comfort and a lot of visibility, I think, as far as how companies can build business models on top of what the potential risks are. And you can contrast that a little bit, I think, with the story in India, which I think some things changed along the way, which I think created a necessity for fintechs in India to have to kind of adapt. But I think that's been much more of an easy road, I think, here in Brazil. I think to contrast that somewhere else in Latin America, in Mexico, where the regulator has been a little less clear, a little bit less transparent, that's actually created this big overhang of uncertainty for fintechs and other people innovating in the system. So I think that's somewhere where Brazil has done really well. And then I think I mentioned Drex as I think one element that's really different here. And I do think that Drex, which is something that's really going to start getting rolled out in earnest next year, most likely, is a very, very ambitious project. I think that the idea of tokenizing real world assets has been kind of a dream, especially in the Web3 and crypto world. And I think that a big government initiative to do this is probably going to be the first in the world at any reasonable scale. And I think we're very excited about the level of innovation that adding liquidity, adding transparency, and adding a lot of these other efficiencies of a digital marketplace is going to bring through Drex in the Brazilian financial landscape.
I think Julio covered a little bit of the central banks. I think one interesting parallel to India is kind of who benefited from these changes in regulations, or at least the order of who benefits from these changes in regulation. And I think what we saw here in Brazil was that the central bank agenda, with the benefit of hindsight and kind of seeing what other markets had done, the main objective was to increase competition and to decrease banking concentration. So there wasn't as much of the incentive kind of transparency and control over the transactions, which is something that we heard from a lot of both the regulators and entrepreneurs in India, where the RBI's motivation, or at least part of that motivation to begin building the digital public infrastructure for fintech was, part of it was a matter of national security, part of it was a matter of just transparency and control over the transactions. And so I think that really shaped the order of who benefited from these changes first. So comparing to Brazil, for example, once the central bank released this agenda of new regulation, the first thing that happened was that new entrants suddenly could build on top of this new infrastructure. And so new entrants benefited a lot from this regulation early on. They were able to have lighter licenses compared to traditional banks, lighter capital requirements, start building upon this digital infrastructure and gain market share quite quickly and actually just attack the incumbents right away. And so that drove a level of competition that maybe we didn't see in India as much early on. I think what we heard from a lot of entrepreneurs and investors there was that a lot of the value early on was captured by both the banks, but also a lot of multinational companies that had the infrastructure and had the kind of internal compliance and capital to be able to benefit from that infrastructure. So I think this is an interesting paradox. And then I think the last parallel that I would mention is that new entrants in Brazil that were able to benefit from these regulatory changes also had a lot of access to local capital. So something that we heard from entrepreneurs in India, especially those that were in the lending space, was that access to foreign capital is quite difficult when you're building a company in India. And it sounded like domestic capital was also quite expensive. It still is quite expensive, even though the regulator has been a little bit more careful with how much you're able to charge. Versus Brazil, I think the capital markets opened up really early on. So there was very creative kind of local debt structures to capitalize new entrants, to capitalize new fintechs. There was a lot more access to foreign capital. And so I think that, combined with the regulatory change, really fueled new players and new fintechs to rise. But I think the other side of that is a little bit of what Julio was mentioning in terms of the creativity of entrepreneurs, right? Which is what we saw in India. And I'm in this kind of environment where there's so much interesting infrastructure, but there's so many kind of regulatory constraints. What do I do? And I think we saw kind of these different business models arise in India that we didn't see as much in Brazil.
Did you get a chance to try UPI when you were in India?
So I was able to, I don't know if Julio did, but I actually went 2 weeks in India without any cash. So I created an account on Wise, and I was able to actually connect my Pix account to Wise. So I would transfer money via Pix, and then I would do the exchange, and then I would be able to use the UPI rails. So I was actually able to pay a lot of people via UPI.
Wow. You're probably one of the first people to connect Pix to UPI. So that's pretty cool.
Definitely one of the first people to do that. So how does it compare to Pix? I'm just curious because I see a lot of similarities between both the systems.
Yeah, I mean, I'm happy to give you an overview of Pix, but I think from a usability standpoint, it's quite similar. Ultimately, you're moving money digitally and instantly from point A to point B. And I think the interface obviously is different in both places, but it's both equally easy. And I think in both places, it's equally evolving. So just to give you a sense of how Pix works, and I'm actually also happy to share a few numbers from a comparison standpoint that might be interesting. But so Pix here in Brazil, everyone, and this is either an individual or a business, they can link any bank account, or let's call it digital wallet account, to a unique Pix identifier ID. And that ID could be your
Right.
phone number, it could be an email address, it could be your personal identification number. So, kind of imagine like our equivalent of Aadhaar in India, or even just generate a random Pix ID. So you can then take any Pix ID and then you can digitally transfer funds that are linked from one account to another one. And you can do this obviously 24/7 instantly between these different ID numbers. And you can do this for free. So I think in that sense, it's very similar. And I think you can obviously link an ID to a QR code, right? So the QR codes here in Brazil, similar to India, they're interoperable. So they're kind of linked to an ultimate, call it receiving account. I think that maybe a key difference here was actually that in the rollout, the central bank already rolled out interoperable QR codes, whereas I think in India, this was kind of a second step, is to create this interoperability between the QR codes. Give you a few cents here. So, Pix started at the end of 2020. So it's less than 5 years old. You currently, I just looked up before our call here. We saw that there were 6 billion transactions of Pix in August. You compare that to UPI, which had roughly 15 billion in the same month. That said, India, as you know, has 1.4 billion people versus Brazil has a population of 215 million. So if you think about it on a per capita basis, we're talking about over 2x the volume that you have in India. So definitely in terms of penetration of the market, it's happened, I think, much greater and much faster, I think, than even in India, which is interesting. I think the other thing to think about is also just from a financial volume standpoint, also looking at last month, there was around $430 billion transacted on Pix. I looked up UPI, and that was roughly $250 billion. So also when you think about just the sheer financial volume that's happening here is just really mind-blowing of something at this scale. And I think, like I said before, the central bank here had this benefit of having seen how things worked out in India so successfully, and both adopting the things that worked out, but also correcting some of the things that eventually had to be corrected. I think one thing was this interoperability of the QR codes from the get-go, I think was critical. I think also thinking about the business model was pretty interesting. So here, I think similar to India, when you have a peer-to-peer transaction on Pix, the regulator says you can't charge for it. However, when you have a transaction between a person and a business, the financial institution or the technology company that's enabling this is allowed to, but not obligated to charge for it. So that does provide for some business model for those that do provide the infrastructure for Pix transactions at the user level, which is pretty interesting. And then I think that the last thing that I thought was actually quite curious as a parallel is that I think that a lot of the awareness of UPI probably happened as a result of the massive marketing spend that a lot of the players in the market, whether it was a Paytm or whether it was Google or whether it was PhonePe, were all investing, I think, in trying to get adoption, I think primarily of their QR code systems in the get-go. And then I think that just made Indians aware of UPI, I think before even UPI, just of digital payments and using QR codes. And I think here in Brazil, very similarly, when the Pix IDs first came out, there was also this huge race by all the financial institutions to get people to link their Pix ID to the bank account on that financial institution, kind of making that financial institution the kind of the primary account or having more principality. So also that marketing spend by the private sector went a long way in terms of bringing awareness and bringing usage of Pix with the population. So I think both regulators were quite clever in leveraging, I think, call it private marketing budgets to get the word out about these new digital instant payment systems.
Yeah, if I can add a different lens to that, I think that's a really good overview in terms of like adoption and volume of transactions. I think another thing that surprised me when I was in India was that despite kind of Pix having had a huge impact on how people transact and how people interact with financial services in Brazil, I think in India, UPI had also a very big social impact in terms of bringing people into the financial ecosystem. I think Pix
That's
changed
right.
the way that people transacted. So most Pix adopters used some form of digital payments before. There was a share of Pix adopters that before were mainly cash users, but a lot of them were already transacted digitally in the old system that you could compare it more to like an ACH or wire transfer, right? And change the way they
Right.
transacted to Pix. But I think in India, what was really, really incredible to see was how much UPI had an impact in terms of both digitizing a lot of consumers and businesses that weren't digital before, bringing them into the formal economy, and then creating a new set of data that allowed these consumers and these merchants to now have access to a whole range of financial services that they didn't have before. So I think that magnitude of impact in terms of like social and economic impact with UPI was greater than what we saw in Brazil with Pix.
I think the other part about Pix that is interesting for me was the fact that there's a fair amount of B2B use cases that have started being kind of operationalized on Pix, which you've not yet seen on UPI. So could you maybe quickly give us a couple of examples of those as well?
Yeah, definitely. I'm actually curious to hear after from you why you think that hasn't picked up as much on UPI. I do think this was a second wave of Pix. So you had a first wave,
Yeah.
which was very focused naturally on consumers. In fact, I think the entire kind of central bank agenda throughout the 2010s and early 2020 was focused on retail and mostly focused on making financial services easier and better and more cost effective for consumers. So as a result of that, I think the first wave of adoption with Pix was definitely driven mostly by consumers and in peer-to-peer transactions. I think slowly we started seeing peer-to-business transactions pick up. So if you just anecdotally, if you are out and about in Brazil, very similar to India, anything that you want to purchase, even if you're at the beach and you're purchasing coconut water with the vendor on the
Right.
beach, you're going to purchase that with Pix. And then the volume of those transactions tend to compound faster than the volume of the peer-to-peer transactions. So we started to seeing this P2B kind of make up a larger and larger portion of Pix over time. And then finally, we started seeing B2B payments. I'd say probably in the past 2 years that has picked up quite a bit. And so I think a lot of businesses starting to receive payments on Pix, they had to adapt the way that they process and that they conciliate payments on the back end. And then they realize, hey, I'm already kind of building this infrastructure because my consumers are paying me that way. And this, when I say infrastructure, I'm talking about something kind of very simple, like just a very simple like tech stack that allows you to receive Pix and to reconciliate this and with your bank statements and etc. But then they're like, hey, this is a much more effective rail for payments. I'm being the cost of this is about half of what I would see with other methods of payments. And so I'm going to start doing bigger transactions through these rails. And then we're starting to see new players come into the market that allow businesses to do that. And so even you mentioning a little bit of the report, we brought 2 case studies to the table of companies that do that. One of them is Zippy. There's another one not on the report here in Brazil called Umi, but they leverage the Pix rail to provide working capital loans to businesses, and so enabling businesses to transact more via the Pix rails. And then the second one, more relevant to B2B versus a peer-to-business, is Stark Bank, which actually started as a B2B bank. So kind
Right.
of with that value proposition that Nubank had for consumers, that was the value proposition that Stark Bank wanted to bring to businesses. And then they built the infrastructure for their consumers to process Pix transactions. So they're processing now more than 1,000 transactions per second. They have the infrastructure to do so. And then they started providing this infrastructure to other players, so either financial institutions or even retailers to connect with the Pix rail and start transacting more through that. So both on like a government central bank perspective and on new players perspective, we're seeing a lot of development on that and the volume of peer-to-business and B2B payments on Pix pickup.
That's pretty interesting. And I think the reason why B2B has not yet really picked up as far as UPI is concerned is the limits that were there on UPI transactions to begin with were fairly low. These have significantly increased over the last couple of years. So we should start seeing a higher adoption of business to business payments on this particular rails. And also the fact that there's certain other new products that were recently announced, both as far as UPI is concerned, as well as bill payments are concerned, which will now let businesses exchange invoices, etc., using the bill payment rails that is there in India. And part of this field start seeing some of that flow onto UPI as well. So hopefully the B2B situation should improve over time as well. A quick question that I also had was I see a lot of similarities between what you've been telling me about the systems in Brazil and how fintech has evolved in Brazil and how we've seen some of the evolution as far as India is concerned. I'm just curious, are there any cultural similarities that you also noticed during your visit to India?
I think that there are some similarities. I think in the way that people interact with each other. I think especially kind of in
Yeah.
smaller communities. So I do think that kind of both Brazilians and Indians are kind of a very warm people. But I also think it's they're both places where the level of trust, I would say, that people have. I think both with businesses, but I think in general in society, it has historically been fairly low. And I think that that means that if you're able to engender a high level of trust from your clients, from your consumers, whether that's through communities or whether that's through building a trusted brand, that level of trust can kind of then be leveraged on to sort of adjacent business opportunities. So, you see both in India and in Brazil, these very large business conglomerates, oftentimes kind of controlled or owned by families, right? And maybe they started with something that was, industrials or kind of very real world, and they eventually started leveraging
Yeah.
those names for a bunch of other, unrelated businesses at first because people trust the Tata name or the Reliance name. And in Brazil, you have sort of the equivalent families, and being able to first gather that trust and then leverage it to kind of go into new businesses is incredibly important. So I also think that relationship of being a low trust society that is able to lean on communities, lean on relationships, and eventually lean on brands to build these big businesses. I thought that was an interesting parallel as well. That's much more of a cultural one.
Yeah, I think on a personal level, I had an absolutely incredible time in India, and I think a large part of that was the hospitality that we got from people in India. I mean, it is pretty incredible that we came from outside. So we're a fund based in Latin America. We don't invest in India, and we went to India with the sole purpose of learning and then trying to share some of the learnings that we had, but also to bring a lot of learnings back to the ecosystem here in Latin America. And just the amount of people, the sheer fact that we had 60 meetings while we were there that were willing to spend time with us to talk to us about the Indian ecosystem, to honestly just give us a lesson on what they've lived in the past 5, 10, 20 years. I think it was incredible, and I think you will see, if you come to Brazil, a very similar level of hospitality, a very similar level of excitement to talk about the ecosystem here. There's a feeling that everyone's kind of together trying to push the economy, the society forward. And I felt that very much when I was in India. And I think the other thing that I'd say, you mentioned kind of the sentence on the report around adversity. I think that's very true for both India and Brazil, where entrepreneurs face really a set of challenges that it just, when you look at it at first glance, it seems like it's impossible to build a business in Latin America or in India because there's just so many
Yeah.
many challenges, right? I think every entrepreneur, both here and in India, has faced capital scarcity, has faced bureaucracy, red tape, kind of text complexity. We in Brazil and in Latin America as a whole face huge talent scarcity, which I actually think is something that's a big competitive advantage in India. But regardless, it's just a level of adversity that every entrepreneur and operator faces in both economies that I think has made entrepreneurs incredibly resilient and adaptive to change. I think the fact that we're seeing big fintech companies coming out of India, despite many changes throughout the past few years, both around regulation, but also just in terms of adoption, is really incredible and just speaks to the resilience and adaptability of entrepreneurs, which we also see here in Latin America.
That's some pretty interesting parallels that both of you have drawn. I think just before we wrap up, let's look ahead. What do you think is next for fintech in India and Latin America? Are there any trends or developments that we should be keeping an eye on?
You probably have a better sense of India than we do. um,
Definitely, but it's always good to get a fresh perspective.
I mean, from the outside in. So I think on a product level for fintech, what we're seeing in Brazil, I think it's hard to talk about Latin America as one region because the truth is that every country in Latin America has a different set of circumstances, and it's in a different point in time.
Yeah.
Especially driven by regulation, market maturity, when we're kind of the first big companies to start building that ecosystem. So I'll try to talk a little bit about Brazil and then bring in some elements of other countries as well in Latin America. But I think at a product level, we're seeing a lot of innovation in Brazil in credit. So if you think about the impact that Pix and Open Finance being our kind of equivalent to the account aggregator, right, in India, may have on credit, it's really incredible to think about. Drex as well. So both in terms of lenders being able to collateralize and tokenize different types of financial assets to be able to draw from a larger span of data that's completely controlled by the consumer, but is shared in a transparent and easy way between financial institutions. That means that just access to credit is bound to become cheaper and more accessible over time. So when we think again about that idea of Brazil 1, 2, 3, and 4, I think Brazil 3 and 4 will feel the impact of this a lot more going forward. And then I also think there's been a lot of innovation around wealth management. I actually heard one of your podcasts that I thought was incredibly interesting with, I think, Satyan Kotari from Cube Wealth. You were talking about kind of wealth management in India and just the adoption of consumers with the stock market and being able to kind of purchase stocks, purchase equity, and invest in mutual funds and invest in different types of fixed income products. I think in Latin America, this has been a lot slower than what we've seen in India. I think you mentioned like 30 million accounts were open in the last 2 years, and that's just a magnitude that we haven't seen in Latin America. Not even in Brazil, where we had a first wave of consumers flocking to the stock market when the interest rates changed, and we had a few players here like XP pushing forward that adoption very differently from what we saw in India via independent financial advisors versus kind of self-service platforms like we saw with Zerodha in India. But we did have
Yeah.
that wave, but not to that magnitude. And I think now we're starting to see new companies more focused on wealth management, some regulatory changes that might be able to push that forward. So I think it's one area that we've been spending a lot of time on and are really excited about.
Yeah, I think like if I can add on to that, probably two things I'd share. I think the first one is that the notion of authentication, and I think in particular, sort of digital identity has become more and more important, right? As you have to authenticate someone for a transaction, you need to aggregate all their data. Be it, we talked about, sort of the digital locker and this concept of having all your data in one place that you can share with different players in the market for different use cases. I think that's becoming increasingly important. One of the unicorns here in Brazil is a company called Unico, which it plays squarely in that ID tech space. And we covered a lot of this in this year's report as well. I do think that when you think about the future of payments, a lot of what we're going to start seeing is that the future of payments is kind of the no payment, right? So to some extent, it's recognizing that someone is at a place that they're trying to do a transaction, and you can kind of very seamlessly and almost invisibly clear a payment safely and conveniently. So I think that's kind of the holy grail for where you start going as far as financial movements. I think India has been innovating in this direction, right? You see sort of voice authenticated payments using artificial intelligence, I think is a really interesting experiment and innovation that I think is going to start building up from that. So I think identity and authentication is a big theme. The other one is actually probably a framework that I would share that we also presented in this year's report that we're calling a little bit of this everything, everywhere, all at once, to borrow the title of the Oscar-winning movie. And the idea here is that, you have these huge tectonic shifts and huge inflection points in the market of new trends, and whether they're in consumer behavior, whether they're in regulation, whether they're in new technologies. And for example, when you look at Latin America or Brazil, this might be, Pix with instant payments. Maybe it's the advent of artificial intelligence. Maybe it's a huge media platform that digital influencers have created. Maybe it's the fact that both India and Brazil are countries that are almost run entirely on WhatsApp when you think about a new digital platform. And I think that the most interesting way to think about the future is kind of you take all of these trends and you kind of throw them in a bag and you shake it up and you sort of mix and match them in very creative and new ways. And I think that's where a lot of the innovation comes from. I think it's hard for us, as investors or as commentators to be the ones that are going to predict the future. I think it's much more of our job to have a prepared mind and have our doors open so that when an entrepreneur comes through them, trying to define what that future is, we're kind of ready to invest and we're ready to back that person and creating that compelling future that combines some of these new inflection points in the market in very, very creative and unique ways. So when we think about this world where everything is very seamlessly connected and you're able to have these different functions that exist under the hood, whether it's powered by open banking, data sharing, Pix, UPI, et cetera, everything else that we're talking about here, that's where I think the future comes from, is these very unique combinations.
Excellent. Just one quick question to wrap up things, right? And not to put you on the spot, but if you had to describe India in one word, what would that be?
I would say ambitious. I think it's this view of kind of going out there and conquering the world and being kind of the biggest economy in the world and kind of being at the forefront of innovation and technology, and this great ambition over not only the next couple of years, not even the next decade, but almost the next century to kind of really have its place under the sun like it's had in history.
I would probably say community. I think it's a country where I felt people really come together to build great things. They're really proud of their role, but also the role of others in building what India will be going forward. And they're very selfless in the way that they do so. So it's I would probably say community.
Excellent. That's definitely food for thought. And this has really been an engaging conversation for me. And I'm sure the listeners have enjoyed it just as much. If anyone wants to connect with you to learn more about Latin American fintech landscape, what's the best way for them to reach out?
I think definitely find us on LinkedIn, connect with us. If you want any more information about Latin America, feel free to send us a message. If you want to download any of our research, it's visiting our website at atlantico.vc. But either one of those channels is great. And I think we're always happy to help anyone in India that's trying to learn more about Latin America.
Excellent. I'll include all those details and a link to the report in our show notes. Thanks once again for speaking with us, Julio and Ana.
Thank you, Elroy, for having us.
Yes.
That's it from India FinTech Diaries this week. Do log on to your website, indiafintechdiaries.com, for show notes and other exclusive contents. Until next time, stay safe.